technically speaking, we haven't truly entered phase 2 of the banana zone yet. We've just picked up the banana again.
That's right. It'll be when Bitcoin breaks its new highs, which I think is probably next week, because we get to the top, we consolidate a bit, and then it goes, and then everything goes. And the banana zone really won't kick in the terms of the way that people think, where everybody's getting hilariously rich and all sorts of stuff, probably until Solana breaks all-time highs. Because that's people's biggest bag, really, is Solana. Yep. And that needs to happen. Then risk gets recycled out the curve, because people do simple maths, and everybody's going to do it. Oh, they start saying, okay, maybe Bitcoin goes to 300,000 this cycle, let's say. So therefore, it's got a 3x from here. And then they're like, oh, but Solana could do a 5x from here, and Sui could do a 10x from here. And before you know it, everybody rushes out the risk curve, because it's later in the cycle and they want to capture as much gains as possible.
Bitcoin is sitting just below its all-time high. When it breaks through, it unlocks the second phase of the cycle, where capital rotates fast and the entire market begins to accelerate. That's the latest message from Real Vision CEO, Rawl. Bitcoin is holding above $100,000, but the next phase of the cycle hasn't fully kicked in. Momentum has cooled slightly, with some short-term pressure coming from the derivatives market. Still, the overall structure remains strong. On-chain data continues to show strength, and structurally, the market still points toward continuation rather than reversal. We are in a transitional zone, above key psychological levels, but still waiting for the breakout that signals the next leg up. According to Pal, the banana zone doesn't really begin until Bitcoin clears its all-time high with conviction. That's when sentiment resets and capital starts to rotate. But the signal that marks full risk-on behavior is still ahead. Pal points out that it likely won't arrive until Solana reclaims its own all-time high. That's the unofficial signal that risk appetite is back in full force. Once Solana breaks out, investors begin to stretch the curve, looking to squeeze as much upside as possible from every altcoin that hasn't moved yet. That phase hasn't hit yet, but it's getting very close. Make sure to stick around until the end of the video as Rawl breaks down what could trigger the next explosive phase in crypto. Also guys, if you want to stay ahead in the crypto world, I send out a free 5-minute daily newsletter covering expert predictions, on-chain data breakdowns, and breaking news. Click the first link in the description, enter your email, and join 50,000 others in becoming a smarter crypto investor today. Now, here's Rawl laying out his outlook for the weeks ahead.
What's funny to me is we've kind of proven that liquidity is 90% of the price movement of crypto and 97.5% of the NASDAQ. So it is the dominant macro factor, but people don't want to believe it. And because like global M2 leads by 3 months, what happened is in Q4, global liquidity was draining because the dollar went up and rates went up and etc. And so that has the knock-on effect in Q1. And then what everybody does is apply narrative in Q1. It's the tariffs, the world's fucked, we're going to the recession. It was nothing to do with that. It was just the liquidity. So it's kind of like, yeah, it was this easy. Now, what it will do, it will decouple at some point. And normally it decouples in the bull phase of the cycle and then the full bear phase, because that's when fear and greed take over. And like the FOMO part of it is when network adoption increases massively. And it starts breaking away from M2, which is why it only has a 90% correlation, not 100%. So I think we'll see that now. And it's just saying now is, if this continues to play out, it's just banana zone from now until July. And then we've had, we've got to think 3 months in advance. So what we've had is the dollar correcting the last couple of weeks, rates correcting. So we should see the market correct in August.
Yeah.
And maybe it's as simple as that. And that would be very consistent with previous cycles as well. Everyone's scratching their head saying, why has gold been doing so well and crypto has? And I thought, I know there's going to be a simple answer to this. It's not going to be some complex thing. And in the last GMI, I figured out that all gold does is follow financial conditions, which lead. So it's kind of real time. And then crypto follows with a 3-month lag. So it's like, oh, I get it now. So gold is just representing the fact that financial conditions, and we define financial conditions as the dollar, rates, and oil. Those are the kind of big daddies of it. Once they start moving, gold moves. So gold has been correcting somewhat because they've started to correct. And so gold is actually leading this because it just is real-time financial conditions, while Bitcoin and crypto and NASDAQ is just lagged by 3 months. It's as simple as that. I can't believe it. I put out a tweet at the actual peak of Bitcoin dominance and said, I think dominance has peaked. I think it has. It's the right point in the cycle. It's this part in the banana zone when it happens. It usually happens after this first correction. So if that's right, and let's say Bitcoin goes from 100K to 150K for easy maths, then if you look at the performance of the other tokens, you can kind of impute what happens is that SUI probably does 3x that. So Bitcoin dominance, generally when it falls, it is the start of the silly season.
Yeah.
I mean, that's, obviously, by definition, it means that other tokens are outperforming Bitcoin. And if Bitcoin's going up, which we're still going up, then what we should see is that. So I think, we've had a little correction in Bitcoin dominance, went from 62 back to 63. It'll top out again and then move lower. And that next move, people will really start to see it. And I think that's the move when Bitcoin goes through all-time highs and everything else goes completely bananas. So here's the same kind of period in 2021. So it happened in Jan that time around.
Yeah.
That drop went from 70-something% down to 38% in a few months.
That's crazy.
Right, that's alt season. We saw it here back in 2017, which I think is a very similar one. It started like in Feb 17. That went from 95 to 35.
Yeah.
What's interesting is Bitcoin dominance over time is falling. So the peaks are always less.
Lower highs.
The lows seem to be roughly equal, but it suggests to us that we should come somewhere back down here, and it happens fast. It happens in 2, 3, 4 months. My bet has been, as you know, has been sweet because it's outperformed everything. It just keeps going up, correcting, going up, correcting, going up, correcting. So it does all the right things. It outperforms all of the time. And I don't see any reason why that's going to stop. People argue a lot about, low free float VC tokens. People don't understand a simple fact is that a low free float in a bull market goes up more. Anybody who's ever traded emerging markets knows this. And that's what happens. And in a bear market, they get killed more. It's as simple as that, because you've got less available supply and a lot of demand because there's a lot of attention on SUI and other things like this. And so it tends to work really, really well. This is the Solana SUI chart. If I look at it on a weekly basis. So it broke out of this basing pattern. It flagged, consolidated. My guess is the next move breaks through all of this. And so that tells us that SUI is still the fastest horse in the race.
Yeah.
ETH, different question, because I think it can play catch up. But if we look at this, it just looks like it's flagging here again. And the next move is again the move where we should see a dramatic outperformance of SUI versus SOL. And I really simplify everything, because if we've got one dominant factor, and the dominant factor being liquidity, therefore everything is correlated. So therefore, just do one chart against the other and choose the strongest asset without going too far out the risk curve. But basically, this is a flag pattern. When this goes, ETH has its next move up, wherever it goes to. That's a shocking chart if this plays out, because it will change everybody's narrative again about ETH. I still think ETH from here, could it outperform Solana? It's possible. It's possible. Just because what I think is coming is, as the financial system comes, you don't get fired for building on ETH. My idea is ETH is Microsoft. I've never been to a bank, an insurance company, a large corporate that has Apple Macs. It's all on Microsoft. Why? Because it's an operating system that everybody can use, and you can hire people, fire people, bring in new people, and they don't have to learn something new. But if you were to build the entire financial system on SUI, everyone has to learn a move language. There's less number of developers. It's not had the Lindy effects that ETH has. Now, also the banks love a layer 2 because they feel like they've got control over certain things, but it still has the finality of settlement to the layer 1. So I think ETH is probably going to shock people going forwards. But, you know, XRP looks like it will too, and so does Doge. So it's kind of like everything's correlated.
Yeah.
But if we can break that high, if we can break that, let's say 4,300 high, it's going to really explode. I think we do have an NFT season.
Yeah.
Somewhat different than the last. I think what we're seeing is a current bifurcation. One is Web3 consumer-based brands being built. And, you know, we'll talk about what you guys are doing.
Yep.
But, you know, that's Doodles, Pudgy Penguins, all of that, right? And that still seems to be capturing mind share. Then we've got the art side, which seems to be doing well. Then we've got the PFP side, which, you know, there are a few projects that will survive. And Punks, you know, going to the hands of Mickey Malko, is a good friend of mine, is amazing news. I managed to get the head of the Sui Foundation over drinks one night in Dubai at 11 o'clock at night to get a punk. I said, the reality is you cannot be in the space and having been reasonably successful without owning a punk, right? It's like, it's a rite of passage. Yeah. And so, you know, I think punks probably get to a floor price of $500,000 this cycle, just because there's a lot of OGs who haven't yet bought them.
Bitcoin has spent the past week trading just below the $104,000 to $105,000 range, a level many consider strong resistance. At first glance, it might seem like the rally has stalled, but according to Pal and other market analysts, this could be a healthy consolidation phase. Rather than signaling weakness, the current sideways movement may be forming a bull flag, a technical pattern that often precedes another strong move upward. The dip in buying volume has caused some hesitation, but it likely reflects a market waiting for the next clear catalyst. Following a sharp rally driven by ETF inflows and aggressive liquidations, a period of stabilization is normal. With much of the immediate sell pressure already absorbed, some believe a pullback to around $100,000, or even briefly into the 90,000s, could provide the reset needed to build momentum for the next leg of the cycle. Let's return to Rawl Pal as he continues his analysis.
I know we've talked about this in the past. I think crypto dick butts is another one. You're either an OG and understand it, or you don't. And there's only 5,600 of them there. They're 1 ETH, 1 ETH 25. I just do not see a world that these are not 10 ETH, because they're so important to the space. Because you kind of know, right? Everybody's got a dick butt. You're like, yeah, you get this space. It's like a mini punk.
Yeah.
So I do think we'll see PFP projects maintaining value, certain ones that have Lindy effects. And I think that's good too. I think what Xcopy has done is so amazing because he's got such a broad spread of assets that people can buy, from Max Payne and Friends as a PFP, which is cheap, through to the one of ones, and people can participate throughout his ecosystem. So I do think the art stuff continues as well. So, and then we're going to see somebody do something breakout, which is somewhere between I still think a hybrid idea behind memes and what NFTs actually use as technology. People aren't using NFT technology much yet. They're just using it still for pictures, but there's a lot I think will happen. So I think the NFT space is going to get interesting. And I think some of it will be on Solana. We've seen a bunch of stuff migrate across to Sui as well, because they're faster throughput, so they're more like memes in that way. But we'll also see stuff accrue on ETH. So I think it's a broad mix. If we go back to the financial way of looking at it, if we think that chart of ETH might play out, which it breaks through the 4,300 level and then accelerates to 10K and beyond, right? So let's say ETH can triple from here or more, because if Bitcoin dominance is falling, and we think Bitcoin could go to 250 or 300, whatever the number, you choose your number, then ETH should outperform it. Money in ETH gets recycled into the ETH economy. So therefore the NFTs, even if they double, let's say ETH goes up 4x. If NFTs double, you might get an 8x on your trade. Okay, that's kind of interesting. Now, if you've got something like Meebs or crypto dick butts that are 1 ETH, could they go to 5? Could they even go to 10 in a full, FOMO cycle? Yes. Okay, now you're talking some huge money. That's what people forget. And you and I have talked about this in the past. People forget about NFTs versus meme coins is NFTs have this multiplier effect.
Yeah.
They're a call option on that underlying chain. I've kind of raised this a lot on Twitter to try and see where the pulse is, and people hate NFTs. They don't understand them. They don't really get it, and that makes me very interested.
Yeah.
Because there is a Lindy effect of what survived will survive and thrive. We know what the Lindy effect is. Like Xcopy is Lindy effect, Beeple is Lindy effect, a bunch of the generative art Lindy effect, and a bunch of these PFPs Lindy effects. So it's like, I love that second cycle trade where they get jammed down and you see what's got Lindy effect. Those things tend to wildly outperform. How I've done it to justify how is like, my big macro thesis is this space is a $3 trillion space today. I think it goes to $100 trillion in 10 years. That's just standard network adoption extrapolated out on the log chart. That's 97 trillion of wealth. That's the largest, fastest accumulation of wealth in all recorded history. It's the same, it's more, it's like 3x more than all of the Russian billionaires, all the Chinese billionaires, all of Silicon Valley wealth, and all the Wall Street billionaires added together times 3 or something stupid, right? All happening within a short period. Let's assume I'm an idiot and it goes to 50 trillion, not 100. 47 trillion is still bigger than all of that wealth. And wealth gets recycled into art in the end. So if you speak to a friend of mine, Tad Smith, who used to run Sotheby's, Tad said, the average billionaire has like 4 or 5 houses. Beyond that, you can't buy anything. So what happens is the value of the art in their houses is 10x the value of their house.
Yeah.
Because art is a store of value, it's exchangeable, it's transportable, it's actually a very, very good store of wealth. So I'm just thinking as a long-term bet, by 10 years, some of these X copies will have traded at $200 million. We will see record prices in art in this space.
Yeah.
Right. So there's a bunch of people experimenting with, yet again, token-based economies based around IP and stuff. You're doing it. You kind of backed into it the other way round. The others have done it the other way. Nobody's yet to get it right. But all of our thesis is somehow this should connect to an ecosystem in a way that works. So whether Doodles can pull it off, whether you guys pull it off, I don't know, but somebody's going to get there. We just don't know the mechanism to accrue value to the token in a way that does it, whether it's via buybacks or whether it's via opportunity sets or loyalty points or whatever. We keep creating these token economies and they keep failing because there's an airdrop, people then just dump it. There's no real use for the token and then it gets forgotten. So I don't even know why people do it most of the time, because the actual founding team don't retain much of it. The thing falls 90% afterwards.
And you have a liability.
What have you done? What have you done that's added any value? I love what you're doing, and I love that you're pushing it hard to try and do it, because somebody's going to get this right.
Yeah, somebody's going to get it right.
It's the same with the creator economy. It's the same with sports teams. It's the same with brands. Somebody's going to crack this, and the whole thing is going to fucking explode. Whether it's this cycle, we get the first look at it, then we get the Lindy effect, and then after that is the big one. But it's coming. I know it is. It's been part of my core thesis. So I love how you guys are experimenting. The Doodles one, does that work? I don't know, but they have. I caught up with Austin the other day. They have a lot of ideas of what they want to do to create true value from it. So it's not just a meme coin in itself. Meme coins is okay. I don't have an issue with it. But really, if somebody can figure out how to make an economy, then we've got something big, really big.
For Rawl Pal, the long-term direction of this space is already coming into focus. As the crypto market expands from its current $3 trillion size to what he projects could be $100 trillion over the next decade, that capital will not remain static. It will move, evolve, and seek out places where value can be stored with meaning. Bitcoin, as the most established digital asset, will continue to anchor that flow. But beyond Bitcoin, other parts of the ecosystem will also absorb capital. One of those destinations, he argues, is digital art. Not because it's trendy or speculative, but because it represents something deeper: ownership of cultural relevance in a digital world. In his view, NFTs are not just collectibles. They're assets that carry significance, context, and history, and that makes them valuable over time. As wealth in crypto compounds, the search for places to park that capital will shift. Luxury goods, real estate, and traditional art will still matter, but digital assets that exist natively on-chain will become increasingly attractive. NFTs fit that profile. They are visible, tradable, and often tied to creators, communities, or ideas that resonate with a generation that grew up online. For PAL, this is the early formation of a new financial layer where identity, expression, and capital converge. The NFT space may still be uneven and misunderstood, but he sees it as a foundational pillar of where this ecosystem is heading next. Remember, if you want guidance through cryptocurrency's exciting but sometimes unpredictable world, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.